Hello there. Welcome all. Thanks so much for joining the Startup Club FinTech Investment Conference. I'm Batuhan and I'm the host today. Um, as some of you know, that we are a global entrepreneur community. We connect startups with investors through these fundraising event investment conferences since 2019. So it's been 7 years now. We organize more than 100 events. So about 500 startups pitch to thousands of investors. And not just for fintech, we also organize events for other sectors like health tech, ad tech, prop tech, beach tech, green tech, fashion tech, and the list goes like that. We also started working with some of the startups more closely on their fundraising as well. So this is us, this is Startup Club. And for today, we invited 5 great fintech startups. I also shared my screen so that you can look at the posters, see the presenters and the board members. So each company will do 5-minute presentation that will be followed by 6-7 minute Q&A with the advisory board members. We will also ask the board members to introduce themselves soon. But we have Douglas from Connecticut Innovation, Thomas from Hardcore Capital, Robin from Goosefella Ventures, and Maxim from Blackwood. As you can see, also we have a event partner. We partner with Resonant. We love what they do, and we thought their solution could be relevant for the audience here. And they will also briefly introduce what their solution before the pitches. And yes, shall we meet the panel members? Douglas, would you like to introduce yourself? Thank you so much for joining. It's glad to have you on board.
Great, great to be here. Appreciate the opportunity. Doug Roth from Connecticut Innovations. We are about a 35-year-old venture capital firm, basically generalist investors at seed stage, but have a bit of flexibility as to how we invest, when we invest, and what we invest in. We have about 240, 250 companies in the portfolio, spanning climate tech, life sciences, robotics, Internet of Things, FinTech, InsurTech. We have about $550, $600 million assets under management. We operate as an evergreen fund and recycle our capital over and over again, investing about $50 million a year. So looking forward to hearing the pitches. Thank you.
That's great. Thanks so much, Douglas. Robin?
We're a bit smaller. We have around 15 Nordic and Baltic fintech companies. We're a fintech-focused investor, focusing on the Nordics and Baltics, early stages primarily. Been doing this for 11 years now. We have investments in Klarna, Lunar, and some of lesser-known companies as well. Yeah, based in Stockholm.
Thanks so much, Robin. Thank you for joining. Maxim?
Hello, everybody. Max here from Blackwood. I hope you can hear me.
Yes, we do.
Fantastic. So calling from Copenhagen. Robin, good to see you again. Yeah, fellow European investor. We also invest heavily in fintech. I would say like a kind of a calling card. But we also do a bit of frontier tech, which is a bit of a broad definition. We usually invest pre-seed seed all across Europe. Ticket size is 100K to €1 million. We have like 5-6 more investments to make with Fund 1. We're currently raising Fund 2. Fund 1 is performing pretty well. Big exposure in the UK based on our fintech, of course, angle. But super happy to be here. Douglas, good to meet you as well.
That's great, Maxim. Thanks so much for joining. Thomas?
Hi, everyone, and thank you, for having me here. Hardcore is a pan-European fund. We originated in Denmark, actually, in Copenhagen. We still have a fairly big office there. But kind of over the last 2 decades grew to be a pan-European investor. We're sector agnostic, really indexing on founders. And we invest anywhere from pre-seed to Series A with tickets anywhere from like 500K up to 5-6 million, with a sweet spot, I would say, in the seed range, somewhere between 1 and 3 million tickets.
That's great. Thanks so much, Thomas. All right then. shall we hear also from our event partner, Resonant? I guess Michael or Dana. Michael, I guess you're here to share a bit about Resonant, right?
Absolutely. Thank you. Great
Yeah.
to meet everyone here. So I am Michael Seymour. I'm a co-founder of Resonant. We are a go-to-market organization that builds AI augmented growth systems for VC and PE-backed companies, traditionally seed stage and Series A. These systems are customized to each portfolio company and deliver repeatable revenue within 60 days of implementation without requiring any human capital investment. So I've got one quick slide that kind of shows you how it works, and happy to announce that we're actually moving from a hybridized service model that uses the software we built to a full-scale software offering within the next month or two. We're looking for people to join a beta. The beta will be free to participate in. I would love to connect with any of you after the fact who are willing to give us some feedback on that. I'll leave my LinkedIn at the end. So really quickly, I'll pull up. I might need some permission to share.
Yeah, you got it.
All right. Okay. So everybody can see my screen?
Yes, we do.
Perfect. So what we do is we take historical deal data. This can be opportunity data. This can be deals in your CRM, what have you. All we need is a company name, company domain, and date of meaningful interaction, typically first meaningful engagement. We ingest that data. Then we run very, very deep research up to 12 months in the past at the account level across the entire cohort, find all of the events that preceded a deal, stack those events at the company level, and then analyze the entire cohort to find the top 5 to 10 events that we believe would meaningfully predict demand in a lookalike company. We then use those events to build lookalike audiences and orchestrate those audiences to 3 primary channels, one being SEO, AEO, GEO, kind of your organic play, one being cold outbound, that's LinkedIn and email automation. And then one thing that differentiates us from others doing similar things is we actually build retargeting audiences based on cold outbound engagement. So rather than use paid media dollars to validate a thesis or a messaging angle, we pre-validate that very cost effectively with your cold email, cold LinkedIn, only deploying paid media when we actually see an open, a click, or some other meaningful activity. Once we have that initial touch through our system, we feed it back into the front side, recursively optimizing against every additional pipeline opportunity and deal that we create. Typically work in 3-month sprints, almost always delivering value within 60 days or giving the 3rd month free in chase of that first piece of value for our clients, and clean out at the end of it if it's not working out for you. So like I said, we're hybridized right now. We're working between kind of a consulting model and software, but looking to get some feedback on a full software solution that we're rolling out in the next month.
So thanks so much, Michael. Yeah, do you have anything to add? Okay, yeah, thanks so much, Michael. Great to hear from Resonant.
Thanks again.
All right, then we can now start with our first pitch. Just to remind the rule again, each company will have 5 minutes to present. After 5 minutes, you'll see the timer on my screen. After 5 minutes, there will be sound of beep. When you hear this, the pitch is done. Then there will be 7 minutes Q&A with the panel members. But everyone in the audience can interact with the presenters as well by using chat, but only the panel members actually directly interact with the presenter using microphone because of, prevent this chaotic environment. But yeah, all right then. So event will take about less than 90 minutes. So probably we will finish 7:30 European time and 1:30 Eastern time. All right. The first company, the first pitch is Collectible Invst. Malte, founder of the company, will share the opportunity with us. Also, feel free to share your screen and start when you are ready.
Sure. Hello, everyone. Definitely. I will
Hello.
give it a go. Wait a second. Okay, can you see my screen now?
Yeah.
Yes.
Perfect. So, all right. Thanks for your time. And let me start with a question. So ask a wealthy person what they will leave their children. They won't mention the ETF. They talk about their father's watch, the painting in the hallway, or the wine in the cellar. So these things carry value all across generations. And we are the first to turn them into a custody eligible asset class. So Timeless has already deployed more than 50 million euros assets under management across more than 800 collectible assets. And Collectible Invst now turns this platform backbone into an institutional grade assets under management engine, so to say. So that's basically the whole pitch, and everything I need to do now is the proof to it. And let's start. So family offices allocate 40 to 45% to alternatives, and collectibles get almost none of it, so roughly 0%, not because of disinterest, but there is a missing layer in the whole system. Sourcing, custody, valuation, and exits are for separate deal breakers, right? And no advisor can stitch them easily together. And meanwhile, there's a 32.7 trillion in European assets under management actively looking for diversification alternatives. And there's no compliant wrapper to put it into place. And that's what we want to change. So there are 4 layers. Sourcing of 80,000 active customers we currently have with Timeless Investments and 50 plus vetted suppliers. We call them partners in our network, which we are basically bringing to our platform. So we have more than 900 assets successfully tokenized so far and custodied under management, so to say, with insurance and end-to-end processing. Our exits stand at a 15% average return on realized exits annualized. So this is actual cash which we have paid out and back to the investors and not on paper. And now basically we want to turn this opportunity into an ISIN-based bankable security product where you can plug it next to equities and bonds and diversify investor portfolios with a kind of zero integration efforts for partners like wealth managers or banks. We have 2 revenue streams in the business and on one shared engine. One is a one-time supplier margin on acquisition, averaging around 7%, and the recurring one, which is 1.5% annual management fee for the assets under management. We do an 8-year wrapper, so over lifetime. So the year 1 potential sits at 8.5 million. And then we have a 7 million one-time, which is including the 1.5 million recurring revenues. From the first batch, which is around 12 million euros overall offering package we are allowed to do from a regulatory perspective. So how do we want to do the go-to-market? We have 2 partner tracks. One is retail and banks and wealth managers. So we have thousands of investors and already 1,000 people in the waitlist for targeting 40 million euros assets under management. And then we also would lean towards institutional investors like asset managers and family offices to collect 300 to 500 agent fees with higher tickets, roughly 100K starting, right, to target the other 60 million euros to get to an overall volume of 100 million assets under management in 2 years' time. So definitely a 3 to 5% collectibles allocation unlocks a 1.6 trillion market. We only need a 0.01% of it near term. And we want to expand in 3 stages. One is with key partners to reach to the 100 million. The second one will be the scale phase in roughly 1.5 to 2 years time, adding another 3 partners with a multi-strategy expansion into other countries like Switzerland, Hong Kong, Singapore, and also with the MENA region then by 2029. To add it to a 1 billion opportunity as a pan-European default collectibles allocation product. We do see that we are quite well established when it comes to competition. So direct competitors lack the backbone, right? So we sit here in the open lane. You can see this on this chart. We do believe that we have the right expertise in-house and externally, and also get the infrastructure ready for institutional investors to position ourselves well in this kind of market, which is very fragmented, covered by auction houses and single asset platforms and also private banks for now. So definitely when it comes to us or me, basically, we are at 80,000 investors, which we have acquired in 5 years' time. So I did this now for 5.5 years, and my background is 20 years plus in strategy and finance, management consulting, and Zalando and other stations. And my co-pilot, Michael, who basically runs this as a senior advisor, brings in 20 years plus from BCG, Deutsche Bank, and other investment propositions for portfolio allocations and diversification products. So I do believe we have a great operator set up here and a new product, zero learning curve basically to ramp this up. So
Yeah, all right.
definitely to
Yeah,
close
maybe,
it.
just final words, Malte. Yeah.
Yeah, sorry. This is the opportunity. We are looking for 1.5 million in total to hit this 100 million assets under management. And basically, this is the fund distribution where the majority goes into business development and partner onboardings.
Yeah, thanks so much,
Yeah,
Malte. Great
thanks.
presentation. All right, shall we start the Q&A with Robin? Robin, what do you think? Do you have any question or comments?
First off, I think this is a really interesting idea that I've thought about myself. It's actually a great use of the new technology and everything. Maybe I'm with the risk of sounding stupid now, but what I don't really get from the pitch is like the customer journey. I don't think it's super clear. Are you expecting these billionaires to come to you with the watches to put it on the blockchain? Is it that they invest through the platform? Do you acquire the collectibles and then you sort of tokenize them? It's like, I understand perfectly how it works, but what's the customer journey? What's the upside? Who's going to come to you and so on?
Understood. Yeah, so I will focus on the new business proposition, which is basically collecting the money first, like a fund from the investors, and then put the assets as a underlying to it, right? And then manage them for a period of 8 years' time and pay out the exit proceeds pro rata annually, so that the people are getting their money back over the time, so to say, so that liquidity is not tied up for 8 years, but you get installments based on the exit performances we are delivering after the second year of collecting the funds. So it's a bearer bond structure for now, and it's not a fund structure. For institutional investors, like you said, billionaires or the above, I do think that this product is not the right fit because you would need a high amount of volume to get it to a meaningful diversification allocation. So I'm targeting high income profiles and the entry tier of affluent market first, and then stepping into the second phase then with institutional investors and family offices to do a special dedicated service for them, like an asset manager is also doing. Based product where you just buy exposure to the asset class itself and rerun it as a managed service.
Okay.
So you built, my understanding is you built, you founded and built Timeless Investments. So what is it that Timeless didn't build that you felt there was an opportunity or a need to create Collectible?
Yeah, pretty easy to think of it like a stock picking program with my platform right now. Timeless Investments is offering you to invest into dedicated items and not a portfolio exposure investment like a portfolio product does, like an ETF. So what you need to do on my platform is you have to run through curated assets on my platform. You have to select and basically shop individual fractions on item level. So you have to decide whether to invest into a Porsche 911 or a Picasso or Warhol or a diamond, and basically have to build your portfolio on your own. And a managed service is much more easier for people to get this along because many of the retail clients do not have the expertise and the time to really deal with this in more detail. Of course, we have those customers. We have more than 2,000 of them who are regularly investing and spending a lot of money on our platform. But this is not the mainstream case, so to say. Especially in the European countries and the German-speaking countries, people are used to buy into ETF structures, right? And make it as easy as possible. So that's why I thought it's much better to also offer a second leg or a second layer as this business is maturing. Then you have two different choices as a customer. You can either go to the managed service, like the normal investor mindset thing, or you can go the enthusiast way where you pick items and invest like investing into Tesla stocks or Amazon stocks. So there, it's more about personal curation. You have to educate yourself with us, our help. But I think both products will stay and have its existence rights, so to say.
Mm-hmm. If I may jump in, I have a question, Malte. Dankeschön for your presentation. Making sure I understand it right, are you raising now within the same structure of Timeless, which is New Horizon GmbH, or is Collectible a kind of a different entity in that sense? Is it my internet?
No, it's not a different entity. It's a second brand. Yeah, are you there?
Yeah, I think we lost you for a sec.
Oh, sorry. Yeah, it's a second brand. It's not a second company layer. We are just building an SPV structure to cover and ring fence the assets and the business model in general from Timeless Investments, because also the asset pools are separate and segregated, but it's the same company. So basically, we have the track record within New Horizon GmbH, which is a service provider for both ends. One is the marketplace, and the other one is the new product. And we have two branches, so to say, two brands.
Okay, clear.
Right.
And can I ask you, because the way I'm thinking about it is, right, like people are, with this new product, people are subscribing to, like you're paying 2.5% for you to effectively pick my portfolio of collectible assets, right? Like, so I'm diversifying my risk across the multitude of products or assets, and so I think it really comes down to then trust in you as the manager, right? How do you think about kind of convincing people and partners that you are the right person, that they should provide their trust in, that you're going to be able to select the correct assets?
Sure. One is,
by the
of
way,
course,
Malte, sorry, but I guess you need to answer this question by using chat. By the way, I will close this music. But sorry, yeah. Malte, feel free to use chat to answer that question.
All right.
Thank you so much.
Sure.
Great presentation.
Welcome.
Great question, Thomas. Thank you. Let's move to the second presentation. Second company is Radivision. Mona will share the opportunity with us. Mona, take to share your screen and start when you're ready. I can see your screen, but I don't hear you right now.
Can everybody hear me okay?
Yes, right now, yes.
Okay.
Is it my connection or
no?
hear
We
Mona
can't
well?
hear her.
No, Mona, we can't hear right now.
Yeah.
Audio is on. Okay.
But I guess your connection is not stable.
Do you want to go to number 3 and I'll try to fix it in the next 5
Yes,
minutes?
sure. Nizar, are you ready for
You want to go to
presentation?
number 3 and then company?
Yeah, that works. Nizar, if you are ready, you can continue with you. Okay,
No
that's
problem.
great.
Can you hear me okay?
Yes.
Okay, can you see me okay?
Yes, we do.
Cool, awesome. Let me just share my screen here.
Okay.
Can you see my screen?
Yes, we do.
Okay, cool. Let me just there. Okay. Good afternoon, everybody. My name is Nizar Hassani, founder and CTO of TruthSayer AI. TruthSayer AI is building the world's first AI hedge fund in a box, bringing institutional grade investing to retail investors, to millions of retail investors who've never had access to hedge fund quality strategies. Before I explain what we do, let me show you why we're excited. In just 6 months since the launch of our minimum marketable product, we've grown to over 19,000 paying users, generating 163,000 in monthly recurring revenue, while growing users by 5.6% week over week and revenue by 28% month over month. What's even more encouraging is the quality of that growth. We convert 64% of trial users into paying customers. Our monthly churn is just 2%, which is half of the top decile apps on the App Store, and our unit economics already compare favorably with top decile subscription businesses. We are not raising capital to prove demand or keep the lights open. We are raising capital to accelerate something that's already working. Retail investors face structural disadvantage. To retire comfortably, younger investors need approximately 9% annual returns over the next 40 years. Yet the S&P 500 has historically delivered closer to 7% after inflation. That seemingly small that seemingly small alpha is an $8 trillion problem. Without access to institutional investors, they are structurally in a problem. So who actually generates that missing alpha? Professional hedge funds consistently outperform because they combine massive data sets, quantitative research, and disciplined execution. We've built that capability for retail investors. Our platform evaluates more than 100,000 quantitative strategies across US equities and has produced 3 proprietary model families. Since launch, Valuations AI has achieved a 78% win rate and a 72% return. Dark Pools AI and Earnings AI have also significantly outperformed the market on a risk-adjusted basis. Most importantly, these aren't hypothetical backtests. These are real trades executed in live brokerage accounts. Here's what that looks like for our customers. Users receive AI-generated trade alerts directly on their phones and desktops in real time. They can monitor live strategy performance, receive actionable notifications the moment opportunities appear, and understand the reasoning behind each recommendation through our conversational AI. Our next major milestone is direct brokerage integration, allowing customers to move seamlessly from AI trading signals to automated execution. We are transforming investing from passive research to intelligent action. Our business model starts with direct-to-consumer adoption or subscriptions ranging from approximately $3 to $42 per month, complemented by premium usage-based features. As we scale, the same AI infrastructure expands into larger markets through API licensing for brokerages, robo-advisors, and credit unions, followed by institutional offerings to RIAs, family offices, and hedge funds. So it's one technology platform that supports multiple expanding revenue channels. Our team combines deep expertise in AI, institutional finance, and growth. I've spent more than 20 years building production, machine learning, and financial infrastructure for leading financial institutions, including Goldman Sachs and JP Morgan. Nick Royal, our CMO, previously scaled revenue from $30 million to $60 million and has led growth initiatives for brands like Zipcar and Dunkin' Donuts. Ivan Royal, our CRO, was global CMO at BNY Mellon Investment Services, one of the largest asset managers in the world, bringing decades of experience in institutional wealth management and financial regulation. Despite the seniority, all 3 of us share one culture, and that is to get your hands dirty. We put in long hours doing the real work ourselves in the code, in the app, in the growth stack. Together, we've built both the technology and the commercial expertise needed to scale this business. Today, we are raising $2 million, providing approximately 24 months of runway. The founders have already invested $785,000 of our own capital, and we expect to reach operational break-even by the end of this year. This funding will accelerate customer acquisition, deepen our AI capabilities, expand our product roadmap, and complete broker integrations and position TruthSayer AI as a platform that retail investors can use to get access to institutional-grade investments. Thank you.
Thanks so much, Nizar. Great presentation, right on time. All right. Maxim, would you like to start? What did you think about the presentation?
Sure. Nizar, thank you very much for the presentation. Quick question for me is on the acquisition. So you said you have like around, I think, 19K paid users and 160K MRR. Congrats. That's impressive. But could you share like how much of it roughly came from paid acquisition versus organic pool? And do you have in mind what is the true CAC payback by channel?
Yeah, so roughly about 30% of our users come from paid acquisition, 70%, 70% from paid acquisitions, 30% from organic. CAC payback period for us is about 0.5. So we get our money back in less than half a month. And in terms of CAC itself, it's sitting at around $3.11. I don't have the breakout between the blended CAC is $3.11 right now.
Yeah, sounds good. Thomas, any question from your side?
Thank you for the presentation, and congrats on how far you have come. Like it looks great. I have actually two questions that I'm thinking about. One, how do you how does the model or the app handle kind of capacity constraints and alpha decay of the strategies? That would be kind of like one general trend that I would love to understand. And then the second question is, I saw that you're pricing it as a monthly subscription. Have you considered, and why aren't you going with something like free with take rate on the money that you actually make?
Yeah, so we view ourselves, so to answer the last question, which is an easier question to answer, we view ourselves as a product company. And we haven't really internally thought about whether we want to become an asset manager. Obviously, we'll be valued in a different way if we start, bringing in people's money. So we are looking at different possibilities in terms of either becoming a registered investment advisor, which will allow us to do that and then get a portion of that. But it is a pivot that we would need to discuss with our investors essentially. So that's really where we are at with that. So on capacity and alpha decay, so what we do is we explicitly model liquidity and market impact ex ante, right? So cap per strategy, assets under management, and so the three strategies are retail strategies. We have $100,000 in each one of those strategies, and so what we do is dynamically throttle or retire signals as slippage and edge compression show up. So that is how we would manage that alpha decay. We run our back tests as well on a daily basis. And the back tests also have a walk forward as well from our historical models. So the alpha decay is closely managed by making sure that each trade that we take has a specific stop loss, and it also has a specific sort of take profit level, and all of that is based on statistical analysis. Does that answer your question?
Yes, thank you. I appreciate it.
Okay.
Thank you. Douglas?
Yeah, I'm trying to understand sort of what you do today and your vision for what you do in the future, right? You've got looks like tools for retail investors to analyze the market in ways that they could not analyze the market currently, and sort of access the analysis similar to hedge funds. But you also have models that the earnings AI model, the dark pool model. Do you see yourself as a tools company, or do you see yourself as a portfolio manager?
Neither. We see ourselves as neither, and the reason for that is that from a retail investor perspective, they don't want tools, to be frank, because these tools are complex tools. They don't have the time to actually use those tools to learn, and many of them don't care. So we've spoken to our users, and the number one thing that the users want from us is, can you please integrate it with my broker? So that's what we're working on right now. And the second thing that we hear from them is, can you manage this for us? Which is the question mark that I was talking to Tomas about, right, for us. So retail investors, there are a lot of other solutions out there that are viewed as tools, but they are not based on any quantitative finance strategies in place. And the retail investor there's a group of them, and certainly for our early adopters, there's a group of them that want the tools and want to be able to trade for themselves and use the tools. But for the vast majority, the millions of retail investors that are out there, they would rather us either manage it for them or automatically trade for them. They don't really care about the strategies. We care about the strategies because they need to be evidence-based, and we are fighting really the the YouTubers and the investments in NFTs and crypto and so on that people do based on emotions. That's what we're really trying to change in the marketplace. Does that answer your question, Douglas?
It does. Thank you.
Yeah, thank you. We have about 30 seconds, but Robin, do you have any comments maybe, or small question, or maybe just comments, if you have?
Chaos that I think you have a really great pitch. Actually, it's one of the cleanest ones I've seen in a while. I think that's good to take along. And I also had some questions we can take outside of this regarding sort of the future plans for this, but
Thank you.
a great pitch and clear one. Good to see.
Thank you.
Thank you. Thank you, Robin, and thank you, Nizar. Agree, it was a great pitch. Thanks so much. Great to have you with us today. Thank you. All right. Mona, are you there? Shall we try again?
I'm
Did
here.
you-
Can you hear me this time?
Yes. Yes,
So
we
I
do.
apologize. I'm on hotspot. Apparently, I saw AT&T digging up. They're putting fiber optic on this block, so I think they may have shut down my internet.
Oh, yeah, no
So
worries. That happens.
let's pray that it works. Yeah, thank you for your patience. It was totally unexpected. There was no notice or anything. So good morning. Thank you. I'm Mona DeFraui. Let me share my deck.
Yep.
Okay, we'll go to full screen. Okay, so I'm Mona DeFraui. I'm the founder and CEO. In 2007, VCs asked me to come to Silicon Valley to fix the last liquidity crisis, and I built the first private market platform as an IPO on-ramp. That is now part of the NASDAQ private market, valued at over $1 billion. I'm here, crisis is back, it's bigger, and this time the solution belongs to everybody, not just to institutions. So here's the reality. Only 5 in 10,000 startups that are seeking venture funding will actually get funded. Of those, only 1% will ever IPO, and it's going to take 14 or more years. We have half the number of public companies today than we had in 2000, and retail investors have been cut out for the last over 25 years of the greatest wealth creation engine in history since the late 90s. So since 2022, the tech apocalypse has shut down over 25 billion into. And so what does Wall Street do to fix this? They don't. They just create another bubble and cover it up. So founders, VCs, and LPs and everyday investors have absorbed this crisis. The banks and the market leaders have had their best decade ever. Follow the numbers. The truth is always in the numbers. So the opportunity, the problem that we're here to solve as Radivision is that there's all these new regulations that have come in. They need a scalable demand engine, and that's what we're here to provide. And we serve everybody in the ecosystem. So we help everybody make more money. Way too much information for our short few minutes together, but Deloitte published over 1.5 years ago on this. We have the White House, Congress, and the SEC all enacting legislation and actions towards this. We are talking about unleashing 98 trillion US and equal amount international assets under management pool of capital and retail investor funds. Of that, about 24 to 25 trillion will be accessible compared to 1.5 trillion of VC to date. So this is a massive shift in the market. Radivision's solution is the investor activation engine. We're the lead gen engine for this industry, and we're in the blue in the media side of the business. So we need to refer to the SEC compliant partners all on the right-hand side. We're here to serve the industry, and we can take smaller retail investors and help through the AI we're developing, aggregate them into capital pools of size of interest for the transactors. We have a product suite that we've been testing and refining. It's performed extremely well in the market with our Pitch Planet platform. Angel Wallet is in development, ready to launch. We're aiming for January. Our bytes are our TikTok. So Angel Wallet is like TikTok meets Apple Wallet. And the bytes, the TikTok portion is the new investor relations. This is how companies will think of fundraising. It's investor relations from day one. It's been part of my job title since 1991. This is my whole career. And then the Radivision site, currently with over 50,000 pieces of content, also will launch Angel IQ and serve for the new investor education. We have 3 revenue channels. Even bootstrapped, we can launch with over 400,000 in monthly revenue. Companies can join for free, just like any social media, and then they can boost. And that's the Pitch Planet and Angel Wallet SaaS revenue. With the funding that we have in progress now, we can launch with millions in monthly revenue. We have formed a revenue alliance. We have a signed agreement with the leading partner in the self-directed IRA business, because that's one of the first steps for retail to take. And we've already produced sponsor revenues with some significant partners. We have produced over $500,000 in test and pilot testing revenue. We're on track to create 2.2 billion within 5 years. That would put us in the range of a 20 to or more $1 billion valuation. So we're helping to launch the retail investor private IPO movement, the private markets. This actually, Wall Street reformed it into the unicorn investing movement and focused on secondaries only rather than IPOs, which has then, of course, created the new liquidity crisis. So why me? This has literally been my entire career leading to this moment. Over 10 years in the 90s, back when the system used to work. I've raised $500 million fund in 6 months. I've influenced over 20 billion raised over my career, and this is my 4th start. We have an incredible team. So I'm open for questions. Thank you.
All right, thank you so much, Mona. By the way, there's still little bit connection issues, but we hear you clearly.
Sorry.
At some point, just you're losing. But if you have any unnecessary, page on the web, just close everything. Just my suggestion. All
It
right,
was already closed.
All right.
Sorry.
Okay.
My
no worries.
apologies.
Yeah, let's move to the Q&A. Robin, would you like to start? Do you have any comments or questions?
Yeah, it's once again a really interesting space. We've been working a lot with secondaries and pre-IPO cases lately, with Goose Valley as well. One of the things that when we have looked at this and with partners and everything, this might differ a lot in Europe and especially Sweden from the US. But as soon as you start marketing to retail investor and so on, we have quite strict regulations over here. Is that an issue in the US, or is that more free to market as you please with financial products, financial assets, and so on? And how do you see that?
Excellent question. Can you hear me okay, Robin?
Yeah, right
okay,
now.
Great. Excellent question. And that's part of what the regulations have changed. So the White House passed an order in August to allow retail investors to access their 401ks, the 98 trillion in the US, according to the Federal Reserve. And now the Department of Labor published their rule. People commented till June 1. I commented. I also sent letters to the SEC chairman. He has now opened up a request for comments. They put in my letter as a petition for rulemaking. You can see all of this on my personal website, monadefraui.com. There's an advocacy page, and my 3 letters to the Senate, the SEC, and the Department of Labor comment, and you can see prior work I've done is all there. And a lot of law firms have picked this up. The SEC chairman has asked for comments on this area of connecting to retail. So he has a 3-pillar plan to bring IPOs back again, because what's the point of holding secondaries if they're not really pre-IPO, right? That was what I created, and it got remorphed into something else. So I'm here to finish the issue when now it's obvious that we need this again. So retail, there has been, crowdfunding legislation which allows communication with retail. Obviously, crowdfunding is riskier than a larger, more stable revenue generating company that can go public, yet the communication rules are not the same. So my request to the chairman was make the crowdfunding rules the same for IPOs. allow retail to come in for 20% of the allocation or more. A lot of international companies require retail to have 20% of the allocation. The US actually blocks this, so I've pointed these out. The SEC chairman himself has made it his legacy to make IPOs great again. He's been stomping on speeches that are all publicly published since September of last year. And he spoke at Stanford May 26 and gave an email address, and he wants comments basically on the area of law that I wrote about. And I have the top legal expert who wrote and what I wrote about. And now we formed an alliance. So we're going to be publishing and co-publishing, and this will be coming into the consumer and broadcast media out from behind the curtain. So the laws are changing right now. The White House signed an order. It's legal. It's out. The Department of Labor is executing on this. This will happen. We also have an omnibus of 22 bills that passed the House last year that are sitting in the Senate Banking Committee. I've been watching closely. We have advisory board members who can tell us what's happening. There's a big election. There's a big turnover, thank God, a little bit of hopefully more sanity coming in. But the current administration has done a favor by opening this area, because retail investors have been cut out for 25 years. It's created this bifurcation of wealth, and which has then ignited all the hate and politics and civil war and all this other stuff that we're all dealing with. So by reconnecting the wealth, hopefully this will start to, reverse that process. We saw this all happen 100 years ago. It's just repeating. So the cycle.
Mona, could I interrupt?
Yeah.
I'm curious. Could you comment a little bit as a sort of on the demand gen and media generation? What is your moat and competitive advantage?
Yeah, so the advantage, people can go to TikTok and Facebook and LinkedIn and see posts like this, obviously, but there's a lot of noise. There's a lot of, TikTok is mostly trash. Most of the finfluencers, we've been researching this exhaustively, it's all get rich quick, get rich quick. It's not really opening up what's behind the curtain. So what we're doing is creating a niche opportunity, a niche platform that will allow people to actually become educated. One of the 22 omnibus bills is HR 3339, which is the new accredited investor exam, like a driver's test that hopefully will pass the Senate. I'll be stomping hard on that. That for the first time changes the definition from being rich enough to lose your money to being educated enough to not lose your money. And like a driver's test, we don't want people on the road that are going to have accidents and not follow the laws. So it's rigorous, but now we can open this door so all 401k plans can be open with guardrails, which is what all my letters have said. So that's how it's different. I'm here to solve a problem. I'm not just here to make a huge profit, which we will in the process. But when you solve real problems, the profit follows naturally. So mostly our moat is the niche. We're also, referring directly to the ecosystem. So I don't see BlackRock, necessarily going on TikTok to find clients. They also don't want to deal with the little people, whereas what our AI that we're developing is doing is helping to bring them together like a flock of birds and, create these capital pools that now BlackRock would like to see, 30 million, 100 million. And our goal is also to help seed these capital pools into IPOs, like we saw with SpaceX, the retail, Robinhood got an allocation. Everybody came in after the 25% pop at the highest price and lost their money. So, that's typical. I've been writing on this since 2011. It's time for me to get a little bit louder. And with the laws and now, a consortium of top legal experts behind us, which formed organically, by the way. I didn't even seek it. I just published and they all wrote on me. I have 5 or 6 organic publications. So we're going to open that door and make it a portal and do it in a very educated, numbers-based way. The truth always comes out. We're having the toughest years ever, and, Wall Street and the hedge funds are having their best years ever. So, you just follow the numbers and you see. And
Yeah.
Thank you for your questions.
Great.
Obviously,
Thank
I'm
you
very passionate about this.
Definitely you are. Thanks so much, Mona. It was a good presentation. Thank you so much. All right. The next page is ConfirmU. Yatir will share the opportunity with us. Yatir, if you could
Good
share screen and
evening.
good evening.
Okay. Can you see my screen?
Yes, we do.
Okay. So hi, everyone. I'm Yatir. I'm the CEO and founder of ConfirmU. We're a data analytics company that helps lenders to credit risk assess new to credit through a 3-minute psychometric game. So I don't know, some of you may know or may not know this problem, but there are around 1.7 billion people on this planet that lack access to credit. And what this means is that lenders usually lose something like $5 trillion on an annual basis simply because they cannot reach out and tap to those people who don't have credit history. What this means is that good borrowers may be rejected simply because they don't have any credit history, or they may lack documentation which doesn't suffice. And along the way, blind approvals can go bad, and people can get defaults simply because the traditional lenders don't have enough tools to assess these kind of people. So we at ConfirmU created a novel solution where it's a 3-minute game, and it's being hosted by the lender through a simple hosted API. And that is basically a second chance for those people who don't have credit history, even if they get rejected with no credit bureau history. We managed to prove that this solution has more than 80% correlation with bureaus like TransUnion, and it's predictive enough with a Gini of 45 and an AUC of 72 with an actual 94% accuracy rate. We've tested this solution across 7 markets, mostly in emerging market, throughout 95,000 loans which have been disbursed by our lending partners, and more than 200,000 assessments, which are basically 200,000 games being played by people who use this. We have successful use cases in Vietnam, India, Cambodia, and Philippines, where we managed actually to reduce NPAs by more than 50% with NBFCs, and we actually managed to overturn rejects into accept by more than 82% in those markets. The way we do money is basically charge the lender by a per assessment fee or by an enterprise size license, or we also do arrangements of revenue shares. And most recently, we've entered into beyond credit. And what I mean by that, adjacent spaces like insurance, hiring, migration, and trust digital identity, also with crypto companies. The way we see our traction so far is by 2 business models. One is credit scoring as a service. That being said, that the lender routes to us people that he cannot underwrite, and we underwrite it for him, and we charge by actual numbers of people playing the game. And a new stream, which we recently started with NBFCs, mostly in India, is a direct borrower acquisition. That means that we actually outsource leads. We credit risk assess them and get compensated by percentage of the loan amount, which is actually getting disbursed. So far, we built this company, formed this company 6 years ago, and we've done, commercial first deployment in India with Grameen Foundation. We won several awards, including Tech in Asia, also grant from Monetary Authority of Singapore, and we raised $1.5 million from well-known investors. And we have our technology patented in the US and with 7 markets deployed already. We want to go global, and that means we want to deepen our expansion in Southeast Asia and want to go to ultra high net worth market. Before that, we will want to do also African markets, and we want to grow also in markets with enterprise banking license and embedded credit finance. We're raising $2 million basically to scale our behavioral intelligence platform. What we've achieved so far are 200,000 behavioral assessment, and with the money that we're planning to raise, we want to go to 2 million. And eventually, our vision is to become a global alternative credit bureau with our unique patented technology. We have a great team also, which is international. As you can see, I'm the founder. Next to me is our CSA, Brendan, with 20 years of experience doing global credit models. with Namrita is our leading psychologist, Ricky from Vietnam, who's our banking credit risk expert from Vietnam, and Dr. Vishal, our psychometric consultant. Thank you. I'm open for questions.
Thank you, Yatir. Great timing, great presentation. Thomas, would you like to start? What do you think?
No, thank you so much for the presentation. It's super interesting. Like I think this is a really interesting way to assess someone's creditworthiness. I never came across a solution like this. So that's really cool. One thing that I was thinking about, and if you could shed a little bit more light on, can you game it in a sense that how do you ensure that someone is not taking the behavioral test for someone else? Like, does it need, like, do you enforce that it's in some observed setting, like, or how do you kind of go about it so that you're not testing creditworthiness of someone else that then you're trying to assess?
Yeah, it's a question which is repeatedly asked by people who see that, and we try to randomly turn on the mobile camera, and to make sure that the lender who's doing the KYC, then we can cross-match that person's face with his, onboarding stage. One more thing that I didn't note is that we're not taking any PII, and that means our assessment is unbiased because we don't know who the person is, we don't know his gender, ethnic origin whatsoever. So that means that we're truly democratizing it.
Thank you that because you're now in Asia, and tell me, like, how will that change kind of when you go into Europe or US where you have like GDPR and problems with that kind of regulatory aspect?
In Europe, there's the new European Community Act, which we're still studying. I think we can go about it. Maybe, the first destination would be Italy. In the US, we have to do a bit of a research and, tweak it to meet the Credit Inequality Act. So we don't hurt, minorities along the way, even though, like I said, we wouldn't know who the person is, and it will be really hard to prove, that, we're discriminating.
Thank you. I appreciate it.
Thank you.
Thank you, Thomas. Maxime?
Thank you so much, Yatir. What would you say is one of the clearest evidence you have today of such investor intention that you've got since you started ConfirmU?
Investor intentions. I mean, we have investors from all around the world. Right now, we finished a program by Seed Stars to help migrant women who move from villages to metros in India, and they can't get credit. And so we're getting a grant from an impact fund from Switzerland. And we're seeing more and more investors from, impact, showing great interest in what we do. And also CVCs of banks, especially in India, looking into investing in us.
All right, Robin?
I've looked a lot at different sort of credit scoring companies over the years, as similar to this one, trying to sort of fill with more potential lender borrowers. I think it's been one issue we've seen. It's in quite an inherent flaw that they weren't approved from the beginning, and it's hard to get the banks and sort of the big institutions to adopt sort of a more forward-leaning credit scoring model because they don't have to, because they can deploy as much as they want with the current ones that they have seen. Something that I've been thinking a lot about, especially now when I see your pitch, is sort of if you could add sort of the financial layer to this, because looking at the countries that you've gone into, they are usually a higher interest rate than sort of the European countries, for instance, which give you arbitrage potential to sort of like really good platform where you can do credit scoring and realize that you can get really good interest rates or lending out to people in other countries and getting sort of a financial gap that you're filling. And I think something like that would be really interesting to see in combination with that, because I've seen issues with this kind of model in Europe, I should say, where you do sort of the behavioral, we call it, with scoring. Just something to think about if you could add sort of a kicker to this.
You mean that there are gaps in the risk between markets? If I understand the question.
Yeah.
I think yes, the risk premium in emerging market is high with respect to what's happening in the European market. I think whoever, and I see actually quite a lot, investors pouring money to these kind of ventures, lending especially in countries like India, where they see that there is a potential of high growth, although it's quite risky, but the level of technology development which is going on, especially in India, where I'm present the most, reduces the risk, I think, and that's why I think it could be an attractive market for investors from Europe to actually look. I think there's quite a big gap which investors could actually make money here by investing in such a marketplace like India on this. I hope this answers your question.
Yeah. I'm just thinking how you can sort of something that makes it more interesting from the investor point of view, sort of financial layer to it as well, not just scoring.
All right, so we have about 20 seconds. Yatir, do you have any final words? Or not? Thank
No,
you.
I mean, thank you, for the opportunity, and look forward to engaging with investors post this show.
Yeah, thank you so much. Great to have you with us today. Thank you, Yatir. All right, we are going to the final pitch. Final company is FavorDrop. Jack will share the opportunity with us. Jack already shared the screen. Jack, you can start when you are ready.
Great. You can see my screen?
Yes.
Okay, we are FavorDrop. I'm Jack Sardenia, the CEO and co-founder. We are a FinTech company, but we solve a problem in the marketing space. And that problem is best described by this quote here. The reality is today, 47% of marketing spend is wasted. And that's because businesses lack an efficient and measurable way to act on customer intent. Our solution is to give these businesses a tool where they can only pay on the portion that works. And we do that in the way FavorDrop is specifically a prepaid promotional Discover card that businesses send out to their customers with a 1 or 2 week expiration, and it's restricted to certain merchants, which are typically restaurants. If the funds aren't used in that expiration, the full credit comes back immediately and it can be reissued. The business that sends it out has full insight into all the events associated with that, the activation, the redemption, if it expires. And because of that high value, high perceived value, and high urgency, it does yield proven higher engagement. A variety of forces are working in our favor right now. One is that these AI tools on the market that are the customers we go after use are hyper-targeted, hyper-personal. It's a level playing field, and we give them a tool to stand out. The other is we are US-based, and 150 million Americans are familiar with that tap-to-pay experience, and we're a virtual card. Again, we're US-based. This is the total market size for promotional and incentive spend. We're starting where we have the most traction with automotive dealerships, home services, and healthcare. A good way to think of the customer journey, think of a business that solicits free quotes for customers that submit their information on their website. That triggers an automated text. And as you see here, now that text is changed to have our product, a free offer. Thank you for considering us. Here's $25 to use this week. Our system embeds with theirs, and their call center now knows the status of that. Did the person use it yet? Did they redeem it? And that call script changes to a much warmer conversation where they can say, hey, I see that you just used this credit. Let's talk about this project. This is proven. It's not just theory. This is one of the case studies we have. It's proven to lift 33% relative increase in a 5-month pilot. The reason we can do this and we can do it efficiently is because our platform is configured at the network level. We see that real-time redemption data. When you compare us to the other platforms that just reissue like a Visa gift card, a prepaid Starbucks gift card, they're not configured to integrate with the point of sale, so they don't have that real-time redemption data. And the breakage, the unused amount, they don't reclaim and recoup it. That results in waste. When we've applied this platform and this psychology of giving people something high value with high urgency, one of our partners agreed to do a randomized control study over 18 months. People would walk in, look at a car, they'd leave without buying, and the next day we'd send them a $25, what we call FavorDrop. And it said, go use this week. We love that you considered us. We know you have a lot of options. Just by virtue of getting our product, those individuals were purchasing a car at a rate of 3 to 5x over a control group. And that translates to 2,100 additional cars. We do this all because of our unique partnership with the Discover network. We run on their rails, but the company, the IP, the flow of funds, the management of the clients, that is all in our system. But we are the only consumer-facing product that has these restrictions, and we built it from the ground up over the last 2 years with Discover. We also have alignment with Discover in the form of a 5-year partnership and a $2 million marketing investment. Our go-to-market is very much so focused on tapping into OEMs, manufacturers, large brands. And here, this is an agency partner in the automotive space that we just formalized an agreement with earlier this week. And this is part of the PR announcement. It just is a testament to how much value they can bring to their clients with our product. Highlight our team. One person that stands out for this audience is Frank Young. He's the former Chief Strategy Officer at Global Payments, an Atlanta-based company. And he was core to getting us set up with the bank, the network, the program manager, and get this off the ground. Just quickly, our revenue model, we charge each rooftop a $500 a month subscription. A typical auto group we talk to has 5 rooftops. And we also get a per transaction fee of $2.50 when the card is activated and $2.50 when redeemed. The full face value returns if not used. And this is what we're seeking.
Thank you so much, Jack. Great presentation. Douglas, would you like to start your comment or question?
Yeah, super innovative. Curious, like what you're seeing for conversion rates and CAC prior and post. So like an auto dealership, what was their CAC before trialing FavorDrop versus after? Is it a significant additional expense when they're fronting lunch for potential clients?
Yeah. What we know is our cost per sale when we've looked at it across that data is about $43 when you factor in all the people that get the card, they don't redeem, the people that buy the car and don't even redeem. The typical cost per new sale in retail automotive with the blended marketing spend is $740. So we're way under that. It's kind of hard to separate what our product does versus what the blended marketing does.
And do you see that it is appropriate for certain types of markets versus others? So there's all the trades and services versus auto and other things. I mean, do you think it works better for certain customer segments versus others?
Definitely a considered purchase. And that term in the marketing sense is someone's in, they're going to buy, they're shopping around and they're kind of playing their options and a higher margin value product. That's where it works best. But to be honest, when we go into a car dealership and start with that unsold showroom visit use case, they start using it very quickly with service, with mailers. It's very versatile, but it definitely works in industries with higher margin and considered purchases.
Got it. Thank you.
Thank you, Douglas. Thomas?
Thank you so much for voicing the same like super interesting idea. Maybe one thing that I thought about. Can you talk a little bit about the geographies, and in which order you kind of wanna expand it, or are you staying right now in the US versus like, do you ever plan on going to Europe, or like how do you think about it?
So the card itself is obviously subject to all the PCI and all the compliance regulations. It's configured today to work just in the US. We're now working with Discover to expand it to Canada, and Europe is on the radar, but it's all a matter of proving this concept in the US.
Gotcha. Okay, thank you.
Is that an
Maxim?
exclusive
Yeah, go ahead.
relationship with Discover?
Yes.
Impressive.
I want to add too that in the time when we were building this, Discover was acquired by Capital One, and that does change the kind of the market size quite substantially.
Robin, do you have any question on your side?
Do I understand it correctly that the card is just a one-off card and then it's discarded, or okay?
Exactly.
Can I ask why it's not sort of like a continued loyalty card if you already have them on the hook? Sort of why not when they have redeemed it and on the way out, like if you prepay for your next dinner here, you get a 20% discount or something.
The card itself, at least in the US, there's very strict regulations on gift cards and how you can give a prepaid card. What we are is we're a promotional prepaid card. And in order for that individual to literally tap a link and get it into their virtual wallet in seconds, it has to be single use. And it's like, we don't want them to put in their social security number. We don't want them to have a identity check in order to get a card that they can use repeatedly. But we do have those instances where the business wants to have multiple touch points. They just reissue another card because it's so cost effective. We have an app where they can put that card, save it to their what we call the FavorDrop app, and then they can just get future engagement.
Okay. Well, it's just interesting why you sort of, because you have a unique opportunity to sort of continue the customer journey when you already have them on the hook. And especially if this is, the aim is like, we're going to give this away because we know they're going to try the food at the restaurant and they're going to love it because it's that good, or 8 in 10 people will. Why not use that momentum to sort of have them pay for the next meal or something, like continue the engagement?
Yeah, absolutely. I mean, it's
like
definitely
that.
part of the long-term vision too, is you have that opportunity. You're creating such a sticky relationship with those customers.
Yeah, exactly. Because the ones that don't like it, you're not going to have them as customers anyway. But if you sort of, if someone leaves with that feeling like, I want to have this again, and obviously if you get a 20% discount, you can pay for it because you already ate.
Yeah. On that note, they self-select. They filter themselves out for us.
Yeah. So it was just interesting if you could sort of turn that into sort of loyalty programs. You already have them. Yeah.
Maxim, any question on your side?
Yeah, maybe
Feedback?
to wrap it up quite fast, but we can also take that in the chat. But just wondered, and thanks, Jack, for presenting this. How does FavorDrop kind of get stronger as it scales? Like, what do you foresee being your main advantage in 5 years timeline? Is that still the Discover infrastructure? Is that, I don't know, the redemption data, or the fact you can show some clear ROI to customer in a way other promo tools cannot? Like, how do you see this?
really is everything you just said succinctly is those are all our advantages. I would just add to that is we see this trend I alluded to earlier. Once we get in and show it's such tangible feedback loop to the operators at the businesses we partner with that they put it everywhere. So our customer and our total market size is just based on one use case. But I think this grows where it becomes really ubiquitous with the marketing stack that any businesses were using. We're just going after a sliver now, but it can naturally grow pretty quickly.
All right, yeah. Thank you so much for the question, Maxim, and thank you for the answer, Jack, and the presentation. And that was the final pitch, final presentation. Thank you everyone staying with us until the end of the event. Actually, our last FinTech event was last year, so it's been a while for us to organize this. I hope we will have another event within this year, and we will obviously announce everyone once we do that. So maybe if you have any final word from the panel before we close, like Douglas, what do you think about the presenters? What do you think about the night overall day for you?
Yeah, great. Thank you. Super innovative ideas. Jotted down some emails that I'll follow up. And for anyone in the States, happy 4th of July.
Yeah, thank you so much.
And go US men's national team.
Yeah, good luck to you on the World Cup. Robin, Maxim, Thomas, feel free to jump in.
Yeah, I agree. I think it's really innovative things coming out and leveraging good technology, great founders. Good to get some American pitches and so on, and sort of more of a global flavor on this as well. It's interesting to see compare notes to what's going on in the Europe and the US and so on with the regulatory side as well. How that is led. Really appreciate being here.
Thank you so much, Robin. Maxim?
Yeah, absolutely echoing Robin's thoughts on the freshness of American fellow ideas and investors as well. So good there for us, definitely. Congrats for everybody for pitching, and thanks for bearing with our questions. Super happy to follow up. LinkedIn email afterwards, and go friends as we're talking about World Cup now.
Thank you, Maxim. Thomas?
I think everyone already said it. Yeah, no, thank you to all of the presenters today for your time and kind of standing in front of an audience. It's never easy pitching in front of multiple investors and answering questions live. So really appreciate the time and super happy to connect with everyone on LinkedIn and take the conversations forward.
Yeah, thank you so much. Thank you all the panel members, all the presenters, all the people staying with us until the end. And thank you. Have a good evening, have a good day, wherever you live. Thank you so much.
Thank you very much.
Thank you.
Thanks.
Thanks, sir.